a few of them, which I thought have a direct bearing with the export sector. One are the alignments which have been done in the Customs Tariff Act, which is the alignments with the HSN or the creation of new 8-digit lines, including some for handicrafts and other items which are targeted export areas. These will, in fact, help us to have better identification and targeting, whether for our drawback schemes or otherwise. The IGCR have been considerably modernized. This change, which aims to automate the entire process of and procedure involved, has been conceptualized by the board. And the important aspect is that if you look at the fine print in the revised IGCR, it is that the aim has been to remove any transaction-based or permissions which were earlier prevailing in that regime. I think this is a considerable step so that it allows the participant or the stakeholder to make a consolidated declaration at the end of the period for many of the transactions that were earlier individual based. An inter-unit transfer facility has been permitted in IGCI, which is a considerable leap forward to bring ease of doing business and freeing the capital requirements of exporters or the manufacturing community. As mentioned by the President, FIEO embellishments and trimmings, etc., have been brought back in a much more transparent manner for the aid of the exporting community. Reference has been made to the provision which makes certain publication of certain transactional data which has been entered for export or import on the customs system an offense. Now, this is seriously an issue which has affected in the past our importers as well as exporters. If all would recall, till 2016 or 17, we had the system of publishing daily trade statistics, which of course was never intended to disclose any transactional data. But because of the nature of the customs activities in our country, where the exporters or importers tended to declare certain aspects in the description field, which may have not otherwise been required, it did lead to some amount of leakage of data happening inadvertently. Now, in view of the fact that we want to be exceedingly competitive, we have got very stiff and strong targets that we wish to reach in given time frames. It was even more imperative that confidential data which the exporters and importers put on the customs automated system needs to be protected. So that is the measure which has been conceptualized and taken accordingly. I may also draw your attention that the budget contains a provision wherein small provision has been added to Section 14, the second proviso to Section 14 of the Customs Act. It pertains to valuation on imports. But the important point about that provision and how it helps manufacturing and exports is that it would hopefully, once the rules come out and it has been fully notified, that it would enable domestic manufacturing, which otherwise tends to suffer because of systemic undervaluation, which tends to occur at times from certain origin stations, to address that issue. And as is well known, manufacturing is the base of exports. So some of the benefits which go to the export sector have to be viewed indirectly rather than directly, and they would be helpful. The budget has provided for a simplified scheme for jewelry exports through e-commerce in about 4 months by end of June, which the board will be working on. One other aspect which I would like to mention before I conclude is that the board is ever willing and it looks forward to working with our manufacturing and exporting community to remove any areas of overlapping compliances and to digitize any manual processes that we can. We have a robust systems directorate which assists us in doing all these activities. And even though, admittedly, we have certain shortages and there are time constraints, they have to attend to so many other activities as well. But whatever is absolutely necessary, we are willing to undertake that, and we request you for your continuing feedback, not only today, but in the days ahead, so that we can continue to improve and serve you better, so that the target that the government has for our nation's exports is not met but exceeded. Thank you so much.
Thank you very much, sir, for addressing the participants. We would now like to request Mr. Vivek Johari, Chairman CBIC, to kindly deliver the keynote address and address the participants, please.
Mr. Saktivel, President FIEO, Mr. Sahai, DG FIEO, Mr. Ajit Talwar, Member Customs, and all other dignitaries and participants in today's webinar. Thank you very much and a very good morning to all of you. Let me begin by thanking FIEO for having me and my colleague, Mr. Ajit Talwar, over for this event. Normally, after the budget, we do interact with the exporters for two reasons. One, to clarify, the provisions in the budget which speak to exporters or manufacturers, and of course also to get feedback and suggestions, for any changes that may be warranted in any of the provisions in the budget, or any new provisions, or concessions, exemptions, relaxations that exporters may be looking for, either in law or in procedure. So this is one of those events, and I'm very happy to join all of you this morning. Let me also congratulate the exporting community. I think you've had record exports in the month of December. I was just looking at the numbers, and you're aware that in December 2021, we had a record merchandise exports of almost 37.30 billion US, which is an all-time high. And it's so heartening to see that exports have bounced back, so quickly after the pandemic. And I'm sure the pandemic had, an adverse impact on your operations, on global demand for goods, on manufacturing within the country, your ability to meet orders and in a time-bound manner. But despite that, it's very, very heartening and encouraging to think that all of you have worked tirelessly, and you've overcome all the hurdles and difficulties that the pandemic would have posed for you. And you've put in a record performance. So my heartiest congratulations to all of you for this effort. On specific provisions in the budget this year, Mr. Sahai and Mr. Saktivel have already sort of pointed out the key provisions that that are targeted at exports particularly, and especially on the taxation side. So I'm not going to repeat those here. I will take on board the suggestions that have come from you so far. Namely, I thought Mr. Saktivel made reference to the exemption we've given for embellishments, and there are some items which apparently do not figure in that exemption, even though they used to earlier. I'm happy to go back and have a look at whether these items need to be included afresh or not. I do want to say that in remodeling this exemption, we have had consultations with the other ministries who represent the domestic manufacturing industry. So it's likely that the feedback we got from some of the ministries was that these items are capable of being manufactured in India. They're actually being manufactured in India, and therefore they perhaps do not warrant an exemption. But we would be happy to have a look at the suggestions you've put on the table. On IGCR, I want to tell you that we are at an advanced stage of testing, the module, and things are working as per schedule, and we expect to roll it out, on the 1st of March this year. So the automated process for IGCR, which is actually quite a big change and a very significant change in terms of ease of doing business. And some of the exemptions that exporters would claim, for example, the one on embellishments, are also subject to observance of IGCR procedure. So this procedure is also going to help exporters. And like Mr. Rajiv Talwar explained, there are some new features we've consciously built into the scheme, to remove irritants like inter-unit transfers, capital goods, and all of that. And I hope that the new scheme will work well and seamlessly, without any physical interface being necessary between exporters and the department. That's why the entire process end to end is fully automated, right from the time of your filing the intimation, its movement to the customs formations, and the auto debiting and maintenance of records on the system. I've gone to the extent of telling the systems team to design it in such a way that the return that you're expected to file also gets auto-populated from the bills of entry that you file from time to time, so that you can view it and you can, of course, edit it if you like, but you will have a record of all the imports that you've made in the interregnum, and it will make your job easier in filing of returns. So IGCR, we are on schedule, and like I said, we should be able to roll it out by the 1st of March. On the ITC restriction on the GST side, I just want to clarify that they're really not meant to hurt, genuine bona fide taxpayers. The whole purpose is, as I've explained in my other interactions with the industry, we've noticed a large number of cases where new entrants are coming into the taxpayer base, and even though we carry out some background checks on them, before they are given a registration under GST, we find that some of them exhibit, typically risky behavior. So they don't have, let's say, an income tax footprint. They don't have any background in dealing with goods or services, but they enter the system. They raise a large number of invoices within a short span of time for passing on of credit. Many a times these invoices could be bogus. The credit also would be bogus to the extent there is no underlying supply of goods or services to back up those invoices. And then, they either become dormant or cease to have any activity for a longish period of time. So if at all, we think of restricting credit, it will be in such cases. It will not be left to the discretion of individual officers in the field to decide in which case credit should be restricted in this manner. It will be done in a centralized way through a risk management module, so that it is not arbitrary, it's not discretionary. And I assure you that, like we've been doing in the past, we will use risk parameters to identify such entities, and they will not end up hurting, genuine and bona fide businesses. Most of the things that you would have seen in the budget are actually, a part of a larger narrative that CBIC has been building, where we are trying to use technology, to ease doing business with us. We are trying to automate procedures. We are trying to make disbursals, to exporters, seamless. Even the switchover in ROTTEP and ROSCTL, you'd have noticed, is a much better system administratively, where your scripts can be generated online. You're able to see all the time, what are the scripts that you've earned. The utilization can also be monitored. We're able to track who the beneficiaries are, who the exporters are, which sectors the benefits are going to, and all of that. So it's a much more transparent system, without any need for day-to-day interaction or having to chase up individual cases. So I'm extremely glad, to have any further suggestions that you may have on tweaking of, whatever schemes we've already put out, for the benefit of exporters. The other significant thing which was not picked up by FIEO, but which was pointed out by Mr. Talwar, is the scheme that we're doing for jewelry exports by courier. And this is a time-bound commitment, and within a matter of months, and of course after consulting with the concerned Export Promotion Council, which is the GJEPC, we will work out a scheme for enabling exports of jewelry using e-commerce. And that, I think, will also help, because there are a large number of exporters who are either MSME or who do not have the bandwidth or the scale to be able to carry out normal exports. And e-commerce is becoming extremely popular. Many of the exporters are already doing it domestically. So we see no reason why it cannot be done for international trade. And we try and work out a scheme within a time-bound manner. But once again, we'll be happy to have suggestions from exporters in working on the details. We are fairly well on course with regard to disbursal of drawback. I have the numbers here, and I think we've done much better in 21-22 vis-a-vis the previous year. And part of the reason, of course, would be the pandemic. But I just wanted to share with you that there's a substantial increase in the drawback disbursements made during this financial year vis-a-vis the last year. And likewise, with regard to ROTTEP, ROSTEL, arrears of MEIS, SEIS also, we are well on course. About 45,000 crores worth of benefits have been disbursed already, of which around 16,000 crores pertain to ROTTEP, RS, CTL. These are very broad numbers that I have with me right now. So this is an interactive session, and I really don't have I'm not going into the specific proposals in terms of duty changes which are meant to benefit exporters. I'm sure all of you have seen them. Some of them were mentioned also. There are some for the jewelry industry, the diamond industry, likewise, for electronic hardware, chemicals. There are a large number of exemptions that have been given for inputs and raw materials that go into these sectors, and therefore they also end up benefiting exporters. So I'll stop here, and I think let's have some more time for interaction. And if you have any questions, any queries around the budget, we'll try and answer them to the best of our ability. If I don't have ready-made answers, I can always sort of give you our responses offline. But both Mr. Rajiv Talwar and I are here to receive your suggestions, and we are awaiting your feedback. Thank you very much.
Thank you very much, sir, for addressing the participants. We would now request participants to kindly raise their hand in the meeting, so then we can request you to kindly unmute yourself and ask your query. To start with, we will request Pankaj Chadda sir to kindly unmute himself. Pankaj Chadda sir. Pankaj Chadda sir, kindly unmute yourself.
What is happening? I appreciate that the interest of the exchequer has to be taken into account. But what is happening is that at the ground level, there are a lot of disallowances being taken by the field formations for various flimsy reasons. And what is happening is that if we have gone now, all of us are going through GST audits. So under Section 16, so many things are being disallowed, which practically are genuine business expenses. So the factor is that these are two interrelated things. If too much of power is given to the field formation for disallowances, it leads to a lot of disallowances at the hands of the exporter when the audit is done. For example, when you look at provision of gifts at exhibition, the field formation says that's not a genuine business expenditure, so it should not be taken. Entertainment with foreign customers, not allowed. Now, you say everything regarding food should not be allowed, but dealers' conferences, again, it's not allowed. Diwali gifts, not allowed. So like that, the more you give them the chance for a disallowance, we are having a situation where we are having unnecessary litigation going into for disallowances which actually are genuine for exporters. For example, just 3-4 small points. Like at the end, 13.3a says that where goods are abroad, any services done abroad, like for example, for clearing abroad and transportation to a customer, there is no RCM mechanism because the place of business rule says that the goods were abroad and services were done abroad. Again, we are the field formation says no, this is not allowed. Then again, we have freight on imports, which is done under CIF terms. Matter is under litigation. Again, it's a show cause notice are being issued. Foreign bank charges, again, it is not allowed. They say it should be subject to RCM. Then when we have 2A and 3B reconciliation, 2A and 3B reconciliation in the year 1718, 1819, 1920 was not there. Now, question is, if you are going to get show cause notices from the field formation that these 2A and 3B, whatever differences are there for those years, how are we going to go back to our suppliers and say, did you file the return in 1718 or did you file it in 1819? Well, how is it? It's not tallying. Now, if we are to suddenly get all these disallowances and from the field formation, then how does an exporter try to do? He spends more time doing these things and unnecessary litigation rather than going into actually doing the business. So unless you have a clear-cut guideline, if you just pass a broad law, it is subject to very harsh interpretations at field formation and leading to, I mean, huge challenges for and especially for MSME exporters. So unless there is an illustrative list, okay, this is allowed, this is not allowed, and the board clarifies it, then it makes sense. Otherwise, we are all into a sort of a white trap where we don't know what is allowed and what is not allowed. That's my humble suggestion.
So would you like me to comment now, or would you like to take 2 or 3 questions and then come back together? How do you want to comment?
2-3 questions, then you can come back together, sir.
Okay.
Okay, sir. We would now request Mr. VK Agarwal to kindly unmute himself. Mr. VK Agarwal, kindly unmute yourself, please.
Mr. Agarwal?
Mr. VK Agarwal, kindly unmute yourself, please. Meanwhile, we will move to the other participant. Ambadavalam, sir, kindly unmute yourself, please.
Ambalavan?
Ramki, kindly unmute yourself, please.
Hello.
Good morning, sir.
Yes, sir, please ask.
Sir, good morning. This is Ramki from Tamil Nadu Cashew Processor and Exporter Association, sir. Thanks for the opportunity, sir. We have a very big issues in customs, sir, regarding the import of raw cashew nuts. They are asking clearance from FSSAI. This FSSAI raw cashew nut is not comes under the direct eatable, sir. So kindly request you to take this and remove this, sir. Because of this, whole industry is getting spoiled, unable to clear the cargo on the time. Already we represent the issues with the FIEO also, and FIEO also taken up this, sir. So kindly do the need. Thank you very much.
Okay, sir. Thank you very much, sir.
I need a clarification. So is this problem confined to a certain port, or are you facing it everywhere?
Ramki, it is only for Chennai or other places also?
All other ports, sir. Every port. It's a recent notification on 17th this January, sir.
Okay, all right.
Thank you, sir. Mr. Fool Prakash, kindly unmute yourself. Mr. Fool Prakash, kindly unmute yourself.
Please unmute.
हाँ, सभी को नमस्कार. I am full from Hindustan Mint and Agro Products. Now there is a big problem in purchase of material on GST, payment of GST and IGST. If we purchase and bill and make the payment to the seller to identify that this bill is fake or unfake, it is very big problem. So there may be a provision if the purchaser can deposit the GST or IGST on the seller portal, it may be allowed by the government. So there, all the problem of the payment of GST and is automatically removed. Secondly, there is a big problem of EGM on DGL and Nava Seva for the last 20 days. EGM is not declaring. So I request to make the this problem of GST. This is my advice.
This problem at
Thank you, sir.
pertains to what commodity?
We are in mint and we are in the mint and essential oils. So we purchase if the material on payment of GST to identify that this bill is fake or not fake. If we can deposit the GST and IGST on the portal of the seller, it may be allowed by in the GST Act.
Yes, thank you, Phul Prakashji. We have noted that point. I'm asking you, what is the EGM problem at Navasheva pertaining to? Any specific product?
Mute yourself.
For EGM, problem is for the last 20 days. No EGM is issue on DGL Nava Seva.
What is DGM?
EGM to declare for that goods has been shipped or not shipped.
Okay, so you are saying that no EGMs have been formalized for last 20 days for all commodities.
At DGL Nava Seva.
All right.
We contacted them. They are saying that there is a problem in their software.
Okay, I think I'll respond to these first 3 points and then we can move on, otherwise become unwieldy. So Mr. Chadda raised the point about, the GST law not being clear with regard to ITC. The jury's still out on whether, the law should define everything very clearly or it should be brought, it should just define the broad principles. There's a problem either which way. And I take the point that if it's very broad in its remit, then it tends to be misinterpreted in quotes by the field formations. But the problem with defining each and every item, in the GST law, whether it's permissible for credit or it's not, is that you end up leaving something or the other, and then that's interpreted in a certain way, which may not always be intended. In any case, my suggestion to you would be that if there are specific suggestions, I think he raised 3 or 4 points, which, to my mind, I'm quite clear that some of them are not permissible under the current dispensation. You may disagree with that interpretation, but that's the way the law is. But just to settle all doubts, we are happy to clarify. So please share with us a list of items, your business expenses, which you think should be permitted. Any tax paid on that should be permitted as ITC, and which is being denied to you by the field formations. So, we'll see, how we can clarify and bring more clarity, to the legal provisions. So that point is taken. On cashew exporters, I presume that it's a notification issued by FIEO and not by customs, whereby they would have said that, this particular item needs FIEO clearance. We will, of course, take up with the Ministry of Food Processing. I'm at this point in time not clear about what has motivated them to issue this notification, because normally they come in the case of processed foods, and if raw cashew is not a processed food, then normally FIEO clearance should not be required. But we look into this, and Mr. Rajiv Talwar and I will be able to give you feedback on whether it is required or not after consulting with FIEO. On the problem raised by Hindustan Mint, see, an invoice becomes fake only if there is no underlying supply supporting that invoice. So to say that we are not in a position to tell whether an invoice is fake or not is not completely sort of acceptable. As long as there is an underlying supply and you know your supplier, it is a genuine invoice. As regards, how you can figure that out, I think GSTN has already provided a facility for knowing your supplier. You can sort of key in the GSTN of your supplier on the portal and find out, his return filing status for the previous periods, so that you're clear that the invoices on which you're claiming credit are covered by, returns that he has already filed. So that facility is already available. We are trying to sort of fine-tune that further. Moreover, a more important thing is the availability of GSTR 2B on the 13th of every month. That is a statement like 26 AS in income tax, which allows you to see on the 13th of every month what are the credits that are available in your credit ledger and what is the source of those credits. If there are any missing credits, there's a communication channel which GSTN has provided for you to convey to your supplier that certain invoices have been missed. Please make use of these facilities. They're all meant to aid and assist you in finding out, one, the genuineness of your supplier, and secondly, in figuring out whether certain invoices have been inadvertently not included in the GSTR1 which a supplier has filed. In the new return architecture, you would be aware that we are actually picking up data. We haven't done it completely yet, but the long-term vision is that we'll pick up data from e-invoices to construct a GSTR1 of the supplier. The GSTR1 is an outward supply statement. Whatever invoices figure in the GSTR1 will go to populate the GSTR2A and 2B of the recipient, so that you know exactly what credits are available to you based on the GSTR1 which we've created. And from both these returns of a taxpayer, that is GSTR1, meaning the outward supply, which will help us define the liability to pay the tax, and GSTR2B, which will tell us how much credit is available for a particular tax period. That information will then travel into your GSTR3B, which is your summary return, and which determines your liability and your payments. So the entire system is interconnected. unless technology fails us, which it may in very few cases, in 1 or 2% cases, I concede that there may be some missing data. Otherwise, the way it has been configured quite thoughtfully by GST Council and the committees that have worked under it, there's very little chance of any genuine invoice which has been generated on the invoice portal, e-invoice portal, not appearing in either the GSTR1 of a supplier or GSTR2B of a recipient. So these are some of the safeguards which we built in to protect the interest of both the, particularly the recipient. Some of the provisions that have been brought in GST law are actually meant to ensure better tax, payment and filing discipline. And very often they're characterized as being very draconian and, being very extreme. But actually they're meant to protect the recipient. For example, when we say that, you need to file, if you do not file your GSTR1 for a particular month, a GSTR 3B for a particular month, we will not allow you to file the GSTR 1 for the subsequent month. The whole purpose is to keep those suppliers out who are not genuine, who are just there to game the system, to issue invoices without any underlying supply of goods or services. And our experience has been that ever since we've introduced these provisions, sequential filing of returns, not allowing GSTR 1 for subsequent months to be filed unless you file your GSTR 3B for the previous months, removing the 20% extra credit that was allowed to you every month. All these have resulted in better payment and filing discipline. And I have data to establish that these steps have actually given us good results. And I think GST being a self-disciplining system, it is in everybody's interest that every taxpayer in the system follows his dharma both as a supplier and as a recipient. So all these measures are actually intended to take the entire GST system in that direction. And like I said, the robustness you see in revenue, in tax filing, in return filing, sorry, is because of the steps that we've taken. So please understand the true import of what we're trying to do. And every time we've taken a step which appears to be, very harsh or draconian, we've also taken steps to actually ease the filing process. And this entire interlinkage of returns with the invoices and, amongst themselves is meant to actually help each one of you, observe better filing discipline. And the feedback that we are getting from taxpayers is that return filing in GST has actually become much simpler after we've introduced these provisions and facilities. So we continue to do that. If there are any bottlenecks that still remain, once again, I would urge you to come back to us and give us suggestions on how we can improve it further. The third point, which is about EGM not being generated, it appears to be a localized problem. Like Member Customs said, we'll immediately look into it and we'll resolve it as soon as possible. Thank you very much. We can go on with the rest.
Thank you very much, sir. So we would now request Arvind Goenka, sir, to kindly unmute himself.
Arvind, please. Arvind?
Sir, somehow we are unable to hear him. I would request Dr. Siddhartha to kindly unmute himself.
Can I come in? I had a connection problem. Can I come in?
Yeah, please go ahead, Arvind.
Yeah, please ask your query, please.
Sorry. Yeah. Sir, I'm Arvind Goenka. I'm Chairman, Plastics Export Promotion Council. So there is a dire need to review the import duty on plastic value-added items, or what we call the plastic finished goods. So presently, the import duty is 10% on the import of the value-added plastics, and import duty on polymers is also 7.5 to 10%. The delta is like negligible or nil. And so especially in the articles made from PVC, the import duty is 10% on the raw materials, and on the finished goods is also 10%. So there is no incentive to manufacture in India. Sir, some items do attract 15% duty, but most of them are being imported under the FTAs at 5% duty. And sir, which makes the domestic industry uncompetitive. Sir, we have been representing since 2019 about this issue, and we were expecting that in this budget, some import duties on value-added plastics would increase. So this is quite a requirement from the industry, and just wanted to know if this could happen sometime soon. That's all, sir. Thank you.
Thank you very much, sir. Dr. Siddhartha Rajgopala, kindly unmute yourself.
Thank you very much, sir. A very small point, sir. Really grateful to you for having restored the trimming and embellishment notification 02/2022. Only one point there was that perhaps amongst the items, home textile, chapter 63 has somehow got, has not been included, made ups. So that was there in the earlier notification 50/2017. Sir. I request that that also may kindly be considered, sir. Formally, we have also at the process of writing to you. And it is on par with leather garments and textile garments and handicraft. In fact, the made-ups, there used to be a handloom made-ups that were entitled to 5% in that. So that also has got somehow omitted in this. So grateful if that could be restored, sir. Thank you.
Thank you very much, sir. Mr. Ashok Jain, kindly unmute yourself.
Mr. Ashok?
Mr.
Hello, can you hear me?
Yeah, please go ahead.
Yeah. Sir, at the outset, I just would like to thank you, the chairman, as well as Dr. Ajay Sai and his team for getting one issue clarified in the budget, that is regarding the social welfare surcharges. In fact, if you are aware that no large number of industries were issued show cause notices, and we were really worried. We made a representation, and this was clearly clarified in the recent budget. That is a big relief as far as we are concerned. Second thing is, sir, when once the show cause notice is issued, there is absolutely no provision that the show cause notice is also to be withdrawn, because it remains on record that a show cause notice has been issued. Because once the matter is complied with, or once the issue is closed forever, then, sir, a formal communication is required to be given. So that is one contention. So second is about MSME part, sir. Whenever, sir, there are any webinars or conferences, our focus is mainly on MSME. That is right, so rightly so, because they are the backbone of our economy. But, sir, at the same time, the large exporters are not really given the due weightage which they really deserve. And their issues, actually, no, there has to be some different or separate portal for them also to echo their difficulties or whatever difficulties they are experienced in their day-to-day business activities. So my humble submission is that this is also looked into. This is a general submission. And the third one, Dr. Sai has already said that whatever other difficulties are, we can actually send it separately to FIEO for the consideration and onward submission to the board. Thank you very much, sir. Thank you for patiently hearing. Thank you, sir.
Thank you very much, sir. We would request participants to kindly restrict their queries to the budget 2022-23. Mr. Jagdish Mongia, kindly unmute yourself.
Mr. Jagdish?
My points pertain to mover scheme. Can we discuss? It is not on budget, but on the mover scheme.
Yeah, I think, Mr. Mongia, tomorrow we have a specific session, so it's better that you place it there.
Okay, sir. Thank you, Ji. Thank you.
Thank you, sir. Mr. Ambandavalam, kindly unmute yourself.
Good afternoon, sir. Sir, this is regarding that trims imports, sir. We are facing difficulty in getting clearances up to 1st March. The portal is available only from 1st March. In between, we are not able to clear with duty-free conditions, sir. Port stations asking us to get the certificate from jurisdictional commissioner, and if you are able to get that certificate, we are not getting the immediate clearance from the port officers. So clear instruction may please be given, sir, to them. And one more thing, sir, like EPCG and advance authorization for the trims imports also, if IGST is waived, it will be of great help. And one more thing, sir, for AEO certificate holders only, this bond is applicable. For non-AEO holders, they have to submit some BG additionally. So if we remove this, it will be of great help, sir. That's all. Thank you, sir.
Thank you very much, sir. Sir, would you like to respond before we request other participants to put up their
The
issues?
first point that Mr. Ambagalam made on duty-free certificate, first point is not clear. Can that be repeated?
Yeah, sir, we are facing difficulty in getting clearances up to 1st March from 1st February. We are getting the certificate from jurisdictional commissioners confirming the debit of duty saved amount in the bond registered with them, but customs port officials not agreeing with that manual form. Since the system is not operational as of now, we are getting the manual debit confirmation letter from judicial commissioners and submitting to the port customs wherever the import is happening. But
which scheme are you talking about?
This trims imports, duty-free trims imports.
Okay.
So we need some sort of notification to port officials for accepting the letters confirming the debit from judicial commissioners be accepted, sir. Then it will be easy for us, sir, in between up to another 1 week.
So Rajiv, if you're okay with that, I have to leave now, but I'll respond quickly to some of the points that were raised. In between, I'm sorry, I had to go offline to attend to something. But I did hear a representative from the Plastic Exporters, Council, and he was making a point about reviewing import duty on polymers vis-a-vis finished value-added plastic products. I think the point was that the duty differential between the raw material and the finished product is too low and not justified by the kind of value addition you have in this manufacturing line. I presume as exporters, we are here, all of you are here in your capacity as exporters, and I presume that you are importing your raw material, under some export promotion scheme, and therefore you're not really affected by the general effective sort of rates which determine the differential between the finished and the product and the raw material. But I take the point. We are led, in rejigging duties on many of these products by feedback we get from the line ministries, which in your case would be chemicals, and the industry associations, etc. So, but I take your point on board, and I've noted the suggestion. The gentleman who just spoke, I think, is facing a problem because IGCR is not fully rolled out. And in the transitional period, what is happening is that there are some exemptions which were available under earlier notifications, but they've been migrated to new notifications for which they perhaps don't have, a letter or a intimation, on the basis of which customs can allow clearance. I think we're looking into this problem already. Member Customs would elaborate on this. One instance which was brought to my notice was, I think, some components for telecom equipment and electronic hardware. And we are aware of the problem. I think we have issued some advisory to the field formations not to insist on a fresh certificate, for the new exemption, but to allow clearance on the basis of the old one. So we are looking into that issue already. So that is all I have at this moment. And I think, with your permission, I would carry on, and I'll request member customs to, go through the rest of your suggestions and to respond suitably. Some of the very specific suggestions that you have with regard to exemption notifications or, the ITC provisions in GST law, I'd be happy if you were to put them together as FIEO and send them to us as a post-budget memorandum so that, we can have them examined by the respective sections and see how they can be resolved. So thank you very much for having me over, and I would request you to please carry on with this event. Member Customs is here with you in any case. Thank you.
Thanks a lot, sir, for your
Thank you,
valuable
sir.
inputs
Thank you.
and the valuable time. Thanks a lot, sir. Thank you very much.
Thank you,
Thank
sir.
you. Thank you.
Thank you, sir. Mr. Kiran, kindly unmute yourself.
Hi, good afternoon, everyone. So my question is from the member customs, sir. Sir, on the ground level, we are facing problems for doing the amendment under section 149. Sir, suppose there is any amendment after the out of charge, we are facing problem after the ITC judgment, and we have been asked to go for each and every case to for the appellate authority wherever if we are even going for the voluntary duty payment as well. So if small corrections we have been forced to go to the appellate authority. So we need your intervention into that so that amendment after the out of charge can be streamlined wherever whenever documents were available at the time of clearance as well.
Thank you, ma'am. Mr. Jamil Ahmed, kindly unmute yourself.
Mr. Ahmed?
Mr. Jamil Ahmed, kindly unmute yourself. Mr. VK Agarwal, kindly unmute yourself.
Hello.
Yes, sir. Please ask your query.
Can you hear me? My query is with respect to IGCR. When IGCR was introduced in 2016, it was there just to streamline the operation. The application has to be just given to the respective collected, and from the next day we were doing the custom clearance. Now the amendment which has come working with online system says when you will file the application, IIN will be generated. When you are filing the bill of entry, you have to indicate IIN as well as bond number. Now, my main aim is with respect to the bond. I have seen practically in the past 4 or 5 years, there have been number of cases when we are filing the applications and bonds are pending with the department. It is not being accepted even for 4 or 5 months. Now the new rule says, apart from IIN, I have to give the bond number. It means we are going to the old regime. It means we have to wait on the department till they accept my bond. I cannot file. Otherwise, moment I was submitting the application, from next day onwards, I was filing the bill of entry. So this is my observation. Number 2, whatever application we have filed till date and they are still valid, what will happen for those applications after 1st of March? That is my query. Thank you.
Thank you very much, sir. We will take up one more query before we request Mr. Karwal to respond. Mr. Ojha, kindly unmute yourself.
Namaskar, everybody. Actually, my question is, we have bankers and they are asking us import and export documents for very old period, like 2003, 4, 2011, 12. And even the bankers does not have the invoice numbers with them, or sometimes they don't have the amounts So for us to take out such old documents is very difficult. So I wanted to ask the honorable members and officers how we can handle these things. Thank you.
Thank you, ma'am. Talwar sir, we would request you to kindly respond if you would like to respond.
Thank you so much. You know, as the chairman has already mentioned, there are few points which I have noted, which I will, take up simultaneously, which include one, the FIEO issue which he mentioned, raw cashew exports, then the local issue at Navashiva, which was mentioned for 20 days, there's a problem in EGMs. Other than that, I would request that the points which have been made relating to section 149, the minor problem amendments which Ms. Kiran mentioned, where detailed orders are being sought, appellate orders are being sought for carrying out the amendments. If FIO could, consolidate these points, broadsheet with sufficient amount of detail, so that we can take them up in a consolidated manner rather than it being an individual grievance. So that one section 149 point is one. Then what Mrs. Oja just mentioned about seeking old documents. Madam, as you know that the funds which are given of tax, they are dependent upon the reconciliation of export proceeds. Now, for the old period, where the reconciliation with RBI was not happening directly, to the best of my knowledge, but that can be checked, I'm not 100% sure on that at the moment. To the best of my knowledge, there is a provision for a negative certificate from a chartered accountant or somebody who could give that, and this issue could be reconciled. Again, if the DG could put this in the form of in the broadsheet, indicating the specific court where this has happened and the specific case, one or two cases, we'll be able to take it up and see why somebody has asked for data which is so old, and also they'll be able to give you an alternative to sort the matter out. Insofar as the point made by Agarwal Saab is concerned regarding the transition from old to new, and whether the linking of the iron with the bond number may lead to delay, I have noted this point. I will share it with my colleagues in the board to be able to look into it immediately.
Thank you very much, sir. It's time that, if you permit, sir, we could wind up with today's session. I would request Khaled M. Khan, sir, Vice President FIEO, to kindly propose the vote of thanks before we wind up with today's session.
Very good evening to everybody here. It was a very interactive session. Let me propose the vote of thanks. I express my most sincere gratitude to the Honorable Chairman CBIC, who kindly consented to chair today's session despite its very busy schedule. Sir, your gracious presence and inspiring words will always motivate us to set new examples of excellence in exports. Our most sincere thanks to the member custom, who despite being very busy consented to attend the session. We are greatly indebted to you, sir. We recognize the need of keeping a pace with the rising expectation of various stakeholders and look forward for your guidance and support in all our endeavors. You both have always provided a strong support and encouragement to us during your stint in GNCH. The union budget plays a pivotal role in any country's economy, but most of the times, the important implications of the budget are often missed or not understood well by laymen. Fortunately enough, we have the gracious presence of Chairman CBIC and Member Customs itself, did not leave any stone unturned to dissect the Union Budget 2022-23 brings in for the exporting community. The exports of India are already at an increase, but I'm sure that Shri Johari's dynamism and the zeal supported by Shri Rajiv Talwarji work for the exporting community, the country's export will grow exponentially. Finally, my sincere thanks to all the participants to make this session a success. Thank you very much.
Thank you very much, sir. With that, we come to wind up this session. And all the queries that are there that could be sent to our email. Thank you very much. Thank you, everyone.
Thank you. Thank you, everyone.
Thank you, sir. Thank you all.
Thank you, sir.
Thank you. Thank you, everybody. Thank you so much.
Thank you. Thank you.